I've actually been making a bear case for gold in the near term. Believe it or not, gold bug that I am. I'm not a permabull. And I've said that if you have a circumstance where team soft landing appears to be right, but mainstream finance catches on to higher for longer, that's very bearish for gold because gold doesn't pay interest, right? So if you've got higher rates, you're competing against, the so-called no risk asset of bonds that are paying very high coupons or giving you an excellent coupon. But at the same time, soft landing means there's no fear. So you don't need no safe haven assets. Right. So where's the market for gold?
Gold prices slipped to a 5-month low on Thursday as factors such as rising treasury yields, a firm dollar, and a hawkish view on interest rates from Federal Reserve officials weighed on investor sentiment. According to Lobo Tiggre, CEO of Louis James LLC, and the principal analyst and editor of Independent Speculator.com, he expects to see a further decline in the price of gold over the coming weeks to months.
Think about it. If team soft landing wins, it means the economy seems fine. Well, why would the Fed cut rates? Everybody's been assuming, everybody on Wall Street or, the plurality of investors have been assuming that, as soon as the hiking cycle stops, pause a little bit, not long, but then we start cutting because the rates don't need to be that high. But if we really have this soft landing, we didn't get the expected weakening. Remember, the Fed itself was projecting increases in unemployment far larger than we've seen so far. If that doesn't happen, why would they cut? And people are starting, like I'm hearing this in the chatter of the talking heads on financial media this week. Like people are starting to realize, well, wait a minute, this soft landing has a dark lining here. Higher for longer, suddenly people are starting to believe that the Fed may really actually do that. So why that's bearish for gold, and I'm not just talking gold here, but on this question, why that's bearish for gold is because high real rates are always negative for gold. That's a very strong relationship. High nominal rates turn out, we've discussed this before, to have a negative impact on gold prices. And what supports it is the fear factor. If you have that safe haven demand, then that's good. But if you have a soft landing, there's no safe haven demand. People aren't worried. The people who were saying a month or two ago or after the regional bank crisis, those people were saying, maybe I'll just buy a little bit of gold as a hedge here. Now, I'm scared. Banks are going up, belly up. This is scary. I'm going to buy a little bit of that. Goes out the window, David. That whole source of demand goes out the window. Now, maybe central bank buying by BRICS countries saves us, but maybe not. That's not a trend that anybody can bet on. I think soft landing appears to be victorious. I think that's very bad for gold. I think we could see dramatic moves lower in gold, especially if it breaks below psychologically important variables or technical floors or so on. You could easily see it break under 1900 and go straight down to 1800 or maybe even lower, depending on what gets triggered there. So big moves if team soft landing appears right. On the other hand, if the next regional bank crisis or gilt crisis or whatever the next thing that breaks du jour is, causes the fear to come back, you could see gold take off in the opposite direction. So I'm not sure how helpful I'm being, David. I'm not saying, here's my prediction, gold's taking off, buy. Or not saying, here's my prediction, gold's tanking, sell. I'm saying it could go either way. And if that's not helpful, then at least I hope people will realize it's honest. I don't think anybody really knows right now